All right, so my next guest has several concerns, but also thinks this is a perfect time to rotate into different areas of the market. And the hint was how we came out the gate this year. I want to bring in now Moneta Senior Investment Advisor, Aoifinn Devitt. And let's just start, let's start with a bigger picture thing, because the private credit, I've had two types of guests. I've had the Wall Street establishment types that tell me it's nothing. Then I've had sort of the outsiders that are telling me there's something there. It's an opaque area. There's something going on in there, and they're really worried for the public, particularly as we start to foist this on people's 401ks.
I would actually agree with both of those perspectives. I think when it comes to private credit, yes, there's a problem. Let's start with the end. It's been foisted on 401ks. Do individuals understand what they're getting?
Right.
Have they been missold in liquidity? And that's a real risk. Then when it comes to concentration, do we really understand what 20% concentration in software means? 10%, the top 10 stocks of the S&P represent 40%. That represents something like serious concentration. Concentration in something as broad as software, does that really mean that they're going to be basically in peril, especially when we see these default rates that haven't got as high as that? So I think both sides have merit. Okay,
let's talk about then the overall market, right? And some folks are concerned about the valuations, particularly when you use the Cape Shiller, right? You're in that camp, I think, right now. You're kind of concerned about overall valuation.
Well, if I'm going to compare the risk demand in private credit, which as we know is low, to the risk demand, the demand for risk in equities, which is very, very high, that does give me some concern. We've had this unprecedented geopolitical situation, but markets are looking through that. They're looking through it in the large caps, and they're looking through it in the mid and the small caps. And this is the beginning of really the broadening of that market. So it seems like the market is Teflon. Nothing can deter it from its path. And maybe the question is, where else can investors be today? Can they be in bonds?
Well, for a long time, there was the TINA trade, right? There is no alternative. And I don't know that I'd be comfortable with bonds right now as a major portion of my portfolio.
I think you're right. I think we're back to the TINA trade in equities, actually. Maybe the commentators aren't calling it as that, but we are back because real estate's not looking good, infrastructure's not looking good, and as we know, private credit is looking not good from an investor perspective.
Rotation, large cap into mid and small, U.S. into non-U.S. tech into non-tech. This was the trade that was working prior to the Iran conflict, and you see signs of it. I know last week the factor small cap came on like gangbusters. So we're maybe going, in your mind, we're going back to what was working. We're going back to the original 2026 script.
We are. This is definitely the broadening, as I mentioned before, and this is a very healthy sign that we're seeing that investors do not want to be de-emphasizing their equity portfolio. They want to broaden it out. They're looking through the U.S. exceptionalism story. But as we remember, the U.S., you said it reversed just when the geopolitics really got severe. That's because at the end of the day, the U.S. is still a safety trade, particularly when it comes to tech. Nobody wants to bet against the U.S. But I'm sitting in London and I see this rotation happening. There's been very strong, steady demand outside the U.S. for non-U.S. assets.
Energy recovery. This is a name you like, and I'm calling this like maybe recovery is a good part of this name. Now, what's going to recover energy recovery? Because the stock, a lot of volume too. It's sold off in heavy volume recently. Obviously, you think it's oversold.
Well, I'm going to come back to this concept of the energy trilemma. So when we're looking at energy, there are three things in mind. One is energy security, one is energy affordability, and the other is energy sustainability and recovery. The first 2 points of that have clearly been in question. It's not affordable today where we are, and security is majorly in question. So sustainability is not getting much focus. Recovery here is basically a way of recovering energy. It's a long-term sustainable theory. That's just not in focus. That's why it's been selling off.
Even I have less than a minute to go, but I got to ask about this. You like Supermicro. Now, I will tell you this bounce off 20 to almost 30 in a blink of an eye. You know, I don't know, innocent until proven guilty, but the things I saw and that the CEO is accused of, I mean, I thought sell this stock and never buy it again, but it's showing some amazing resolve, and you think it's got more upside.
Investors are willing to look through bad news. They're willing to look through clouds.
Even when the CEO might have been like, you know, repackaging this stuff, it's okay.
I think the fact of has he been repackaging? The fact that this is a strong adjacent stock that's very much dependent on data centers, that's what investors see through. They have very high tolerance for risk today.
Yeah, well, I got to tell you, it's I've been so impressed with this so far. So good stuff, Aoifinn. Thank you very much.
Thank you.
Appreciate it.